Wednesday, everybody. Hopefully you're doing good. If y'all don't mind, please let me know if the audio is okay this time. I know yesterday we had some audio issues. I don't know exactly what happened, but I'm hoping it's fixed. Hey Rick, welcome to the stream. Thanks for the support. Welcome back. I do hear some echo. Let me see if I can fix that. Oh, I think that's what it was. Okay. Let me know if it's still echoing. Let me know if it sounds good. We can get right into it. Also, guys, please drop comments in the comment section. If you want me to go over anything in particular, it does help the stream. I've got some content, of course, to go over on my own, but I'd love to get your thoughts on things, and feel free to ask me questions. Now, first and foremost, you might have noticed some new names on my Twitter and my YouTube account. I'm doing some rebranding, not necessarily permanent at this moment, but 2020 Tech Official, I talked about this before, very old name, like 10 years old, and it's no longer really relevant. So I'm just going by myself at this point. Most of you already know my name is Mariano, and so you'll find me under something with Mariano in it, under pretty much all my social media accounts. So you'll find me on X at Mariano on X. That's my handle. And I guess I'll flip my view here just so you can see the screen and not myself, not my face. Mariano on X. And then, just kind of being funny here, Meet Mariano on YouTube, all right? Not to be confused with Meet Kevin. Meet Mariano, all right? We're the anti-Meet Kevin crew. We'll just roll with that for now. I think it's kind of funny. But anyway, let's go ahead and get right into it. There's a couple things I want to talk about, and I guess we can start with a quick market review. All right, so let's just go ahead and take a look at the charts and look at how some things are doing today. Now, as you know, or as you probably know, NVIDIA had their earnings call today, and there was actually some pretty funny things going on here. All right, so what I'm going to do is just drill down to a shorter term time frame. And if you look on Twitter, there were a lot of people that were just absolutely confused, all right, because we already know that NVIDIA is doing very well as a company, and it looked like they were either going to like get very close to and meet their earnings projection for their earnings call, or they were possibly going to exceed it. And they had really, really good news to share in their earnings call, and immediately after, immediately after, the price completely tanks in the after hours, right? So everybody's confused, and they're like, oh my goodness, what's going on here? Why are we dropping on good news? And everybody's freaking out and losing their mind. This is why it's really important to understand the market, guys. This, if you're new, just always keep this in mind. It is always buy the hype, sell the news. All right, that's how it goes. So when things are anticipated, that gets priced in advance, and then people are holding and buying, riding the wave up. Once it's announced, that's the peak. There is nothing more positive to come at that moment. So then once people notice that all the hype is cooled off, they take profit. That's why you end up with a sell. But then if it was actually good news, and this is something I like to say that I learned from Zip Trader on YouTube, which is basically with every reaction is basically like an overreaction. So when you see a significant sell-off like that for no reason, there's going to be a counter move, because usually, you know, if it goes extreme in one direction and overreacts, it's going to correct. So that's pretty much what happens in these cases. It was good news. People are taking profit. It's going to sell off. People are then going to freak out. People are going to go short. People are going to do their whole bearish thing, whatever, and then it's going to recover. So as you can see, after the sell-off, it already has started to bounce back up. Anyway, we already know NVIDIA's in a really good place. Basically, just one takeaway from their earnings call is the fact that they said that they have orders for the next several quarters that they are going to be backlogged. They are doing extremely, extremely well. So if you follow me on X, you would have seen my post not too long ago where I basically said, just to keep in mind that if you're looking for some like a top 4, top 5 stock list to hold over the next couple years, I think NVIDIA is going to be one of those stocks to hold. That's one of the ones to keep your eye on. And the reason being, no competition. And it's really as simple as that. No competition in the GPU space as far as top-end GPUs are concerned. They're about to potentially get into CPUs, and they're probably going to lead there. No competition in the AI chip-making space. And they're also involved in autonomous and developing technologies for robotics and AI in the autonomous space. No competition. And when you have no competition and you are constantly innovating and pushing the market forward, as a result, you start to see things like exponential growth. All right, so bullish on NVIDIA. Obviously, it'd be nice to find a dip, but you can see here there was a double bottom where it bottomed out at 100. It's taken off. Now it's at 144. They have good news, good earnings. There's nothing really bearish to affect NVIDIA at this point. I would not count on too much of a pullback. If you're looking to invest in this, you kind of just have to DCA, hope for the best. And what that means is scale in. You don't have to go throw all your eggs in the basket, but buy in 50%, buy in 60%, a good enough amount so you have exposure, but with some money on the sidelines in case you did not buy at the bottom. And when it dips, you just buy more, you reduce your dollar cost average, and you just proceed like so. So that's the news on NVIDIA. Now, as far as other tickers that I'm pretty interested in, let's look at Tesla and Archer Aviation and Joby and talk about what happened there today. So the market was pretty volatile, if you ask me. If we're just looking here over the course of the day, let me see if I can just get from market open today. So this was about, I guess this was midnight. And then once we get, let's see, it's the 20th, right? Sorry, I got my days mixed up. So stocks were kind of weird overnight. We had a pretty big run up on the 18th. We got up to this point here at about 347. And this kind of held us for most of yesterday. We were in this range of like 345-ish average. Sometime around market open today, right here, we just lost all of our momentum. And I found that to be very interesting. But you can see here a couple things. Just from having stared at charts for such a long time, I start to see these patterns. And usually, you know, you get this double move down consolidation, and then it comes up and does the same thing on the back, and it comes back up, and then it takes off further. And that's kind of what I'm noticing right here. In addition to that, we have a bit of an inverse head and shoulders that formed here, which is, you know, both of those things are indicative of a potential bullish reversal. So yes, we did sell off to 334. In my opinion, that was a good buy opportunity. I really don't see, if you're asking me, I don't see Tesla going much under 330 anytime soon. It's possible. That is not like a call that I'm going to make and say, hold me to it. But if you're just asking me what I think, I don't see reason for Tesla stock to go under 330 unless things keep getting more concerning with the whole war thing that's kind of going on right now and markets start to panic in general. So if the market in general doesn't start to tank because of fear, Tesla stock on its own is just in a scenario right now where I think if we're just looking 7 days ahead, that we will be challenging, if we have not already, we will be challenging this 358, 360, we'll just call it, resistance line, and potentially be breaking through that. All of this price action right here looks extremely bullish. The only thing we don't want is to hit this line again and then reject off and end up back here, because that's kind of going to signal a double top, and double bottoms and double tops are very strong reversal signals. But there's no reason for it to happen. I would not count on that. This is not the time to go short on Tesla, in my opinion. There's literally no reason to be bearish on Tesla. So why do it? And just like I said a few days ago, and I posted on my X account, which is basically, you might have speculations based on certain things, and you might even think that you're right based on your gut feeling or whatever, but avoid swimming against the current. Don't trade against the market. When it's very clearly going in one direction, don't be foolish and just think that your trade's going to be correct just because. If it's very obvious that there's bullish information and bullish catalysts and everything's going well and everyone's buying and everyone's hyped up, and evaluation, even if it is high, it's remained high for years and everyone's been okay with that, don't just all of a sudden say, I'm going to go short when the market's still has plenty of momentum. That's how you get burned. So anyway, very bullish on Tesla. But as you can see here, compared to yesterday, we did sell off a little bit. I did not thin any of my holdings on Tesla. I did not buy any more, go short at all, or buy any puts or anything like that. I just don't have interest in that right now. I think it'd be a waste of money. So I'm just holding, and that means that because of that, I'm down technically on the day as far as my Tesla stock holdings are concerned. But like I said, not concerned whatsoever regarding that one. Let's move on to Archer Aviation. Whew. This is a big one, guys. This is a big one. There has been a lot of volatility here on Archer Aviation. And for those of you that don't fully know, basically this is a electric vertical takeoff and landing company. They basically make these mini drone looking helicopter type hybrid things that are meant to be air taxis and take you, jump you really from point A to point B if it's like a short 10-20 mile trip. Think of like an Uber air taxi, a flying vehicle of sorts that seats about 4 or 5 people. So that's what it is. And this whole concept, I believe, is extremely just potentially lucrative if you get in early as an investor. This really, I think, is, again, the future of transportation. And if you can identify the right companies, just think, we're finally opening up new sectors. You might have missed the internet boom or the computer company boom, you know, with Apple and companies like Microsoft, and then a whole lot of other ideas. But these new means of living, of transportation, of, you know, just these significant sectors, we're having new ones open up, and we're having the opportunity to be the early investors now if you were not in a position to be that before, or if in my case you were too young before and weren't even looking at the stock market or anything like that. This is pretty big. And anytime we have the government talking about how they want to lead, or they want the U.S. to lead in a certain sector, we know that the U.S. Stock market is probably going to be strong when it comes to that sector. The reason I say that is because there's some very, very positive things going on over at Archer Aviation. Now, keep in mind, and I will stress this again, and I'm having some fun on X with it because I'm getting trolled over my posts regarding it, but I'm just going to keep playing into it. It's good for an engagement, and I find it to be kind of amusing. Now, I did say to beware of December 20th, where they're going to have that event. All right, they're going to have that shareholder event where they're going to discuss adding more shares to their authorized share pool, which is just, you know, it's not the end of the world until they issue the shares, but it is also not a bullish catalyst because we don't want more shares. We don't want to hear anything about dilution as a shareholder, right? So it's a little negative, but it's whatever. So keep in mind, week or two before that, just tread lightly. It might be time to, you know, consider a December 20th put or something like that without spending a whole lot of money on it. A reasonable December 20th put or 27th put, just in case if you are holding, there is some pullback. That's what I did. Just in case if there is a pullback from now to then, you can kind of hedge on the way down and you won't feel so bad about it. And then you can take those profits and buy more at the dip. All right. But that's completely up to you. It's not even something I would say that, like, it's not, it's a play, it's an idea, but if you don't do it, I think you'll be fine. But the reason I bring that up is because the CEO of Archer, all right, he appears to be pretty vocal on Twitter, or X. You can find him at Adam Goldstein 13. And I went ahead and followed him today because I want to keep up with his updates. He said it's time to build new manufacturing lines, new industries, new cities. And he highlights the fact that Donald Trump kind of verbalized his buy-in on this idea of these eVTOL vehicles. And so what I'll do is go ahead and play this clip here of what Trump said regarding eVTOL vehicles, because it's very promising if we are going to be looking at it from an investor's point of view. So I'll play it real quick. It's not very long.
Another big opportunity is in transportation. Dozens of major companies in the United States and China are racing to develop vertical takeoff and landing vehicles for families and individuals. Just as the United States led the automotive revolution in the last century, I want to ensure that America, not China, leads this revolution in air mobility. These breakthroughs can transform commerce, bring a giant infusion of wealth into rural America, and connect families and our country in new ways.
Okay, and again, this is not at all a political channel. We're not going to talk about on this channel preferences regarding who's running or whatnot. It has nothing to do with that. We're just talking about how the government's plans can affect our investments, right? So this is pretty big. He very clearly states that he wants the U.S. to kind of lead in this space, and he wants it to be a big thing over here. He also signifies his support of it. He highlights that, and you can clearly see that he's standing behind the idea. This means a lot of things because just keep in mind this leadership team has not taken over yet and really done anything. They're getting prepared. This can have some serious implications when you start thinking about how regulations and other things might be accelerated. That whole project might be moved along quicker to help support some of these projects and make sure that we are leading. So that just means if we invest in some of these companies, and if you note what he said, specifically the U.S.-based ones, all right, so that's what I've been looking at, the U.S.-based companies that are involved in the eVTOL space that are getting off the ground. And a couple of those are the ones I always talk about, and that's Archer Aviation and Joby Aviation. And those are the big two right now. Strongly recommend, if you're looking for an investment idea, to go ahead and invest in both of those. I would diversify. I like Archer a little bit more because I like a little more risk and reward, and their market cap is about a third of what Joby's is right now. That being said, Archer right now is they're not done with their whole share situation. So the whole value of a share, the dollar amount right now, is a little up in the air. We have price targets really high. Everyone's saying like $11, $12 at this point. Those averages for the price targets are getting higher. But Archer is also trying to potentially create some more shares to raise some more money. So the current value of, we're at $4 or $5 and they're saying we're going to get to 11, 12. Just think, all right, maybe we're at closer to $3.50 and they're saying we're going to get to like 8 or 9, because you have to factor in that there's probably going to be a couple more offerings here soon. The share value is going to get diluted just a little bit. And also, so with that in mind, also keep in mind if you're doing calls, especially short-term calls, just tread a little more lightly. Maybe a long-term call isn't quite as risky, but you have to remember early companies like this that are suddenly getting a whole lot of exposure, looking to raise money, and they don't have a whole lot of money on the balance sheet right now, even though they have really strong fundamentals and a lot of investments, and they have orders and all that. They have like, I think it was 500 mil in the bank, and they are spending about 500 mil a year to operate. So they've got about 12 months worth of operating capital, and they are not going to really be up and making any kind of money until late 2025 to 26. So it's very, very likely they try to raise a little more money. So shares will probably get diluted 1 or 2 more times in the relatively short to, or I'll just say in the midterm, all right, over the next 12 months. So keep that in mind. Something to consider regardless. All right, and especially if you're not doing an options play right now, I would buy. Not financial advice. I'm not a financial advisor, but we're talking about a $4 billion market cap situation right now when these companies are probably going to be $400-500 billion within a few years. All right, so $1 or $2 here or there per share, I think is going to be overall irrelevant when you're looking big picture. So shareholders, don't sweat that. Think longer term. If you're looking to invest, if you're looking to trade, or if you're looking to do options, have a little more consideration at that point. So that's that. Another thing I want to talk about when it comes to eVTOL and Archer Aviation is that the founder, the CEO, has also stated that he is looking for a way to buy more Archer shares currently. He posted this less than a day ago. He said, I've instructed my team to find a way for me to buy more shares of Archer. He's currently the largest shareholder. He continues to believe that their shares are undervalued relative to their progress and growth prospects, and he is basically looking for ways to get more shares. So, of course, that's bullish. He also posted, and I'll just retweet this so you guys can see it if you're looking for that article, reposted. I'm sorry, I should finish this. He did state, though, and some people might view this as a little negative, that due to the company's progress, he's received, I guess, his bonus, his stock grant. But in order to comply with tax regulations and company policy, whatnot, half of those shares have to be sold by the company to cover the related taxes. So he is technically selling some shares now. He is forced to do that. And if you want to see the SEC's document confirming it and highlighting all the details regarding exactly how much and all of that, you can look here. But I think of all of the things that could be bearish, this one here means absolutely nothing. So I would kind of ignore that tweet and mostly focus on the fact that he wants to buy more, right? He's not looking to sell. He's looking to purchase more, and that's very good, especially when you see people like the executives over at Tesla. Some of them are taking profit. I think someone just did a sell for $35 million. That was probably another thing that caused Tesla to sell off today, by the way. More positive news. Let's talk about Tesla some more because we love Tesla right now. Tesla secures $180 million Megapack battery contract in Arizona. Now, $180 million to Tesla right now is probably not that significant an amount of money considering their market cap of $1 trillion. However, that's good news. And Tesla is only continuing to expand. When we talk about Tesla, there's something else that I want to share here. And I'll see if I can find it in my retweets. Tesla Supercharger V. Maybe it'll show it here. Here it is. Tesla officially announces their next-gen version 4 superchargers capable of 500 kilowatt charging speeds. And these are not going to necessarily benefit. Now, they could benefit. I was going to say it's not necessarily going to benefit the average consumer, but I take that back. It could benefit the average consumer because these are much more efficient, higher output, and I believe that that's going to result in being able to be parked next to another vehicle without them really taking your charge away. I know, I don't know if you guys are really familiar, but if you're a Tesla owner, you know this. When you go to a supercharging station, usually, I think it's 2 or 4 stations. You don't park side by side next to somebody when you charge because you end up sharing the charge and it slows both of yours down. I believe with this version 4 supercharger setup, that won't be the case. And if you're driving a vehicle that is not the Tesla Semi or the Cybertruck, you can park next to each other without it affecting your charge rates. Now, if you are driving a Cybertruck or you're driving a Semi, you're going to be directly affected by this in that you'll be able to see faster charging speeds than what you see today with the version 3 superchargers. So this is really cool. All this does is continue to put Tesla even further ahead. And the reason why this is so important to me is just the fact that, yes, I mean, Tesla, wait, did those doors open? I didn't know that. Did that? That's kind of cool. The reason why all this is so crazy for Tesla is because there's no one really even close to where they are with their charging network infrastructure, even with them opening it up and they're trying to be nice and support the whole initiative as a whole, which is kind of them to do, even though they, I guess, generate money from the actual charging. There's no other company that is even close to Tesla's supercharging network scale or technology charging speed. So, to my knowledge, Tesla's just so far ahead. All right. And that's why I'm bullish. There's just so much in their favor right now. So that's pretty much all I'll really talk about for Tesla, except for the fact that we continue to see, oh no, that's not all. We continue to see Kim Kardashian posting stuff with her, with a Cybercab, with Optimus and with the Cybertruck, just continuing to provide us with free publicity, which is great for stock. And then finally, the last thing I want to talk about here with Tesla is, well, I guess I could start our lo-fi back. that loud, perhaps. The last thing I want to talk about here with Tesla is right here, where it says, in response to stating that we needed larger size Tesla vehicles to support larger families, Elon Musk says, okay. All right, and I'll go ahead and highlight that post as long as it hasn't been deleted. And it starts here. I was at my neighborhood Tesla store yesterday and wanted to make sure, again, that the Model X is not big enough for my family. So they were at the Tesla store. They wanted to confirm. I guess they really want the X, but they were just like, all right, let's try this again and see, you know, can we actually fit in here? They've got 3 kids, a large dog, and needed cargo space. And the X is not quite big enough. Now, I've also looked at the X, and I must say, especially the 7-seater, that third row that houses the 6th and 7th seat is very small. There's not much legroom, and I was kind of surprised because I knew that was the case in the Model Y with 7 seats. I expected the X to have a lot more room inside than it does. The front seats are great. The middle seats are also good. The back seats not so great, like an afterthought. So yeah, they couldn't fit a larger family in there. And then this post here, where Elon was talking about fear of pregnancy and we should teach fear of childlessness instead. Well, someone basically, they spun this whole conversation about needing more space for families if we want to support that initiative, right? And here it is, we need big Teslas for big families. They've proven to be the most efficient and popular car on the market, but if we want to repopulate the West and have more kids, we need bigger models of Teslas to support that lifestyle. Imagine Tesla family road trips across America. Tesla says to that, okay. Elon says to that, okay. He says, okay to the idea that we need to have larger model Teslas to support larger families. All right. This is pretty big because additionally, Elon had already said here to someone else that made a similar, very similar post. Okay, Elon, Robo Van. Okay. Someone says in response to his post also about the fear of childlessness, trying to encourage people to have more like kids and have larger families. They said, I'm working on it, Elon. Now please make a Tesla big enough for my family. And then he said, that's great to see. And in response, he said the Tesla Robovan, which we know has a lot of space inside for people, is in development. And then he says some other things too. Yeah, exactly. That's the reaction right there. Right there. That's our faces right now. All right. As a shareholder, as a stockholder, as an investor, we know how great of potential news that is. So here's the things that we have to consider that I don't think are even being priced into the stock. All right. So the things that are being priced in, the fact that Tesla's leading in this EV space, they are like the largest vehicle company at this point, despite all the EV challenges, and they are ahead of all the EV car makers. They've got autonomous coming soon, and we know they have the Cybercab and the Robovan coming soon, and so they're venturing into this autonomous space, and they're going to be the leaders in that. I think all that's being priced in right now, and that's why the stock is moving up so high. Things that are not being priced in right now, I think, is really the scale of what the Optimus robot is really going to be, and what that could really imply. The amount of orders that we're going to see for that once the technology is really suitable. I think we're going to start to see those in warehouses. I think we're going to start to even see those in certain vehicles, potentially helping them be, well, maybe that's getting a little ahead. I was about to say kind of autonomous, driverless, because you have an Optimus bot driving your car that might not have FSD. Maybe I don't want to go there. But anyway, there's a lot that is not priced in yet. How many families are going to have one of those in their home? How many companies are going to end up getting one of those robots and training it to do basic manual labor tasks? What if you see the Optimus bot being your lawnmower guy instead of the one that you pay every week, right? There's a lot of implications. So the scale of which those bots could be sold and used and then potentially upcharged for services and upgrades, updates, whatever, is not yet realized, in my opinion. So that's a reason for significant upside. And then just the vehicles that we know Tesla has not even really kicked out yet that are potentially going to generate a whole lot of revenue and change the game. So for one, the Tesla Semi, we know that that's almost ready. They've got the infrastructure now with the charging networks that they're putting in for those chargers to quicker charge the Semi vehicles, which is probably the biggest deal because they don't want to be sitting idle when they don't need to be for significant amounts of time. Time is money. That's one thing, right? And once those start to go out, I think that's going to just take over. Who's not going to want to have an electric Semi when most of your operating expense, aside from paying your driver or yourself if it's your business, but most of it, the cost per mile is your maintenance and fuel. So if you take that out the picture, you know how much upside you then see, reducing those maintenance costs, recurring maintenance costs. So that's huge. Those sales there also need to be factored in. But then potential other vehicles too, that, you know, some other things too. They're working on other things here. I think next year too, and this is something nobody's talking about, maybe not next year, but within the next 2 years, we are due for refreshes on the Model X for sure. Okay, the Model X is due for a visual update. The Model Y is also due for a visual update. We know that one's coming soon, the Model Y Juniper facelift. And the Model S has looked the same for quite some time. Now, the Model S, I think, of those kind of looks maybe the best right now. The Model X definitely is starting to look outdated, especially the rear of it. The front also, in a way, is looking a little outdated. Original design. It really has not been overhauled at all. The S has been updated slightly over time, but still, I think there's some Tesla design language things that are missing that could be implemented to help improve that. So I think the S, the X, and the Y, all three of those are probably going to get visual refreshes here within the next 12 to 24 months, or I would even think 12 to 18. And that might be part of the some other things too, where maybe the refreshed Model X is a little bit longer wheelbase in addition to being redesigned, and has improved cargo space and person space as a result. And potentially same thing for the Y. I think both of those vehicles could afford to be just a little bit bigger. I've been in a Y, and it in ways sometimes feels a little more cramped than the 3. So just imagine, right? Those are things that are not being talked about. Those are not being priced in either. Tesla stock, when you consider all those things not being priced in right now, it's very, very obvious that this is a $1,000+ stock, right? And we're still early. Despite having moved up from $200 to $300 not very long ago, we're still early to the game. So if you buy now, I don't think you'll regret it. And if you buy when it dips, if you did buy now and then it dips after, don't think you'll regret it then. But what I do want to highlight though is look at this massive double bottom right here. All right, we've got multiple bullish signs here. We've got a cup and handle formation, okay, which we had right here, you know, cup, handle, however you want to look at it. We've had multiple of them. Bigger one right here, that's forming. We have double bottom right here. That's a bullish reversal to the upside after this pullback. That's indicating we go up. You see this W right here? We've got in there inverse head and shoulders, double bottoms everywhere. Here, 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 inverse head and shoulders, here, here. There is no bearish signal. It's all buy signals. It's just very obvious. So if you're not here, or if you're just watching this and you're not paying attention, I mean, we're going to end up here pretty soon, I believe, and everybody's just going to be watching from the sidelines, all right? And I think that's the case for Tesla. I think that's the case for NVIDIA. Now, NVIDIA has already started to take off, but I don't think they're done. I don't think anyone is even close to this company right now. This is going to be a $300-400 play in a relatively reasonable amount of time, in my opinion. Things are geared up to go way too well. Now, again, that's if no war, right? If there's war and people get terrified, we know stock market sells off. Doesn't matter what stock you are, unless I guess you're military supplies or something. So there's that. I would strongly focus on the transportation sector right now and technology sector, AI and everything related to that. Those are what's about to boom, in my opinion. So be there at the right time, capitalize off that. I do need to wrap up though, so we are going to just look at Joby, because we didn't look at Joby, we did look at Archer. Now Joby, this can be a little misleading whenever you look at, and I know sometimes I say we've been to 17 before, we can get there again, but when you look at it too over the course of time, you need to factor in that the $17 here, they've probably had offerings since then, so the share dilution does not necessarily mean that this is $17 equal to this $6 here. Maybe they did dilute half their shares, and this is like really, this when you look at it now with how many shares is in circulation, could be like half of that, like 8.5 or something dollars. Regardless though, from what we can see here, lots of selling off, lots of buying. Went from $3 here all the way up to 11. There's a lot of volatility here in mid Q2 to Q3 2023. And then big old pullback again down to 4. And now we're at 6. And as you can see, now it's a little hard to see. But this is giving off signs of a bit of a double bottom. It's not super clean. You like to see a little more angularity to it. You like to honestly see a little bit more time in between here instead of it just going up on a pump and selling off. That kind of makes the double bottom a little questionable. It should look more like a double V than an actual double U, right? It should look more like a double W, the letter W. And it looks more just like two U's. So that's a little concerning, but if we get back above this 7 resistance here, then, and we can hold and find support here, I think, then, that's when we've confirmed that we are moving up. Me personally, though, I just, when you have an asset that's this undervalued and so early to the game, there's no real point in just trying to pinch pennies and try and get in at the right 5-cent move, 10-cent move, unless you're trying to day trade or something, which I really would not even recommend with these. Just buy it, hold it, and have some money on the side to buy some more if it dips. Because if you know that within a reasonable amount of time, you're probably going to be here, does it matter if you bought here versus here, versus here versus here? No. But if you did wait to buy here or here, then not only are you wasting time and money, but you're also going to be a lot more nervous when you're buying somewhere up in the air and you don't really know where support is and you're just trying to jump on the train out of FOMO and you're, not near a clear support or resistance. You're just buying into the hype movement. Why not just buy at support? Buy at a discount. Buy when it's cheap. Buy when no one's talking about it. And then once it does take off here, you're going to be up 2x, 3x, whatever. No fear, no panic, no FOMO. Let all the other people do all that. And then hedge against that if you really want to. You can go short or buy a put option when you think we've hit a resistance. If you're up $10,000, spend $300, buy a nice short-term put at resistance, capitalize off the down move, sell it, and then just keep holding long. So those are the thoughts I have there. IonQ is also another big one. Chaz Mandu put me onto that one. Where this is a AI computing play, and it looks like, again, another really bullish situation going on here. So we'll see what that turns out to be. All I know is quantum computing, I think I said AI. Quantum computing is going to be the future of basically larger scale research projects. So anybody in the quantum computing space that has an advantage, Good stuff. I'll close it out by talking about crypto. And so we'll go to Bitcoin and Dogecoin. Bitcoin is making its way towards that 100,000 level. And once it cracks that resistance, the sky's the limit. And this is the same thing I said many years, or yeah, I guess it could be many years ago, but a while ago about Dogecoin. When you don't have clear levels, yes, you could bring out the fib and start doing TA like that. I don't care so much, even though I analyze charts and I do TA and that's how I find levels. I don't actually care about technical analysis to that degree. TA is only to help you find points of entry or sell potentially if you're looking to trade, once you already can establish the direction that something's going to go based off of everything else, in my opinion. Now, establishing the direction things are going to go and how far they're going to go, I think is less about TA and more just about the trader mindset. And we always limit ourselves to what we see short term as possible. So right now we know that we can trade anywhere from $0 to $100,000. And 100,000 is like, man, if only we could break 100. Once we break 100,000, suddenly, and you know, that's only getting up another $5,000 to $10,000, right? But once we break that, no one's going to be thinking about, oh, can we get to 105? Can we get to 110? Can we get to 120? No, suddenly their target is not as small as 60 to 80,000 and then 80 to 100. Now it's, can we break 200,000? And then once we break 200,000, it's, oh guys, we're at 200,000. We could probably get to 500 because we're almost halfway there. And then suddenly your scale starts to just change as the price continues to go up. You start to think bigger. So keep that in mind, that once we break 100K, things might get real crazy. I say that because obviously if you're a Bitcoin holder, you care. But if you're a meme coin holder, you also care. But just know, guys, that as Bitcoin, you know the way this works. Bitcoin rallies first. Altcoins usually wait for stability, and then they rally second. So as Bitcoin's doing all this, yeah, you're not going to see necessarily Dogecoin just suddenly continuing to follow and Doge at 50 cents right now. I did say before to expect Doge to be anywhere from 42 to 45 cents when we're seeing Bitcoin at around 95K to 100. That already happened. Now people are taking profit, and so Doge is sitting a few cents lower. But as we continue to stabilize, and I think once Bitcoin gets into that range that I mentioned, which is like the $95,000 to $98,000 range, and it's sitting there pretty comfortably, that you'll see Doge start to head back up towards that 42 to 45. So I think we're still on target for that to hit again. Once we break 100K though, I think that's when you're going to start to see Doge start really moving towards 50 cents and breaking that 50 cent barrier. And then from there, I think the movement from Dogecoin to Bitcoin will slow down if momentum continues on Bitcoin and just keeps pushing it towards like 150. I don't think you're just going to see like a 75-cent Dogecoin. I think that's really going to move at a lot slower of a pace, but it will be possible to see like a 60-cent Doge. Very possible. Now, with the right news to supplement that, we could see a higher Dogecoin price. But I'm just saying, if nothing is said, Elon doesn't do anything, Trump doesn't do anything, the market, no crazy announcements happen with partnerships and whatnot, and we're just talking about Bitcoin moving and the altcoins following, that's what I would expect to happen. So that's my end of market analysis for today. I will just highlight my account. We're down 314 today. I will just talk about for a moment where we are, how we got there. So from yesterday's stream, we were at 11.2. Now we're at 10.957. We'll just call it. We were at 11.2, almost 11.3 yesterday, and now we're at 11. All right. So today was a bit of a rocky day. You could see at market open, my account took the biggest hit from my Tesla position because it sold off. At the same time, we also saw a pretty big sell-off from Archer Aviation. As it had gone up, it sold off from like 520 almost down to like 490. So it sold off pretty hard. What I ended up doing, and you can see I have a mixed bag of options here. I feel pretty confident that long term, Archer's going to continue moving up. So I am, I've made 1,000 on this Archer call here. I may. It's a January call, so I'm not going to be holding this forever anyway. I'm going to need to sell this and trade it out for something else, whether that's shares or a longer term call or something. I will probably, if the opportunity presents itself and I'm not too greedy and wait too long, sell this call within the next week. If we're anywhere near like 520 to 550 on Archer, because I'll have already made a good amount of money. And I don't just want to keep holding this, especially knowing that in 30 days, we'll be having that shareholder meeting and the price might dip by then. I don't want to hold and be subject to theta decay day over day, where my option just naturally becomes worth less every day that passes because of time, with the possibility that we won't be having just a push to a bullish run and us be at a higher price that's worth it to counter the time decay on my option. So I have to factor time in when I'm looking at where I'm going to sell and take profit here, even if it means I might have jumped out too early. All right. And the simulate my returns thing can be really nice, because you can see if the price were to just hold at what it is right now per share at 512, this is what the value of my option is if I were to sell at 512 for every day that passes. Right now, 1,089, right? But then tomorrow, $30 off. Day after, another 30's lost, another 30, another 30, another 30, another 30. And I just keep losing $30 per day on my option if nothing else changes, because I'm just sitting on it, getting closer to expiration. And then it just keeps getting worse and worse. So I can't hold this forever. And I shouldn't hold this to December 20th, because like I said, if we're at 1,000 today, if I were to hold this till December 20th, that means the price would have to be, in order to still have a $1,069 profit on December 20th, the price would have to be somewhere around 530, 535-ish on the day of the event. So if we don't run up to like $6 over the next couple days, it's very unlikely, with the probable pullback that will happen as people sell the news or sell the negative or buy the negative hype. It's very unlikely that we will be, I think, at $6 by then. So if things rally like crazy over the couple days, I'll be glad to be proved wrong, because then I'll make a ton more on this call. But I am looking for an exit here soon for that reason. So that's my Archer play. Now, with that in mind, as we start to hit these high levels, I know at some point that it's possible for institutional investment, larger money players to start to exit, close some positions. I know some investors have sold some of their Archer recently, and it might just be in anticipation of what could come, so that they're just trading a little smarter. So I did buy some very cheap puts that expire around that time. So starting from, next couple, now this one doesn't matter, I spent like $100 here, but starting from like the next couple weeks up to December 20th, and they're just, down very slightly. It doesn't really matter, like $100 here, $100 there. But the thing is, if things go south, really south, to a level that I would care about if I were holding, because I would kind of be bummed if we saw over the next couple days Archer sell back towards $4, right? So that would net me almost, $1,000 here soon, if over the next week or so people do start to sell out of panic, or the market corrects and then everybody takes profit and goes back down. Because this was also very, very heavily shorted not very long ago. That needs to be kept in mind, that could happen again. And it might be very easy to get people that were just bullish because and investing just because to sell and panic and drive this price back down temporarily. This is more trading stuff, not long-term hold related. So with that, just $100 here, $100 there as potential coverage for my long position here. All right, and then same thing here with this put. If we end up, again, it's a very inexpensive put that I bought, but if we do end up down here, this would give me like another $100 or $200 if we end up selling off. And that's just protection for myself in case, that I bought at when we hit high levels, in case there was a significant pullback. It's kind of like me selling and or being ready to buy the dip if we did sell off by just getting a little more capital off the sell, so I can just put that back into shares because I'm not adding money to this account. But again, barely spent anything on these, so I don't care if they expire worthless. This was really just a just in case hedge. What I plan to do, especially if we don't sell off very much, post or right around December 20th, after that happens, because that's the only potential negative event that I know of, I will be buying more, no matter what happens next. So that's my plan. After December 20th, I'm adding to my position. So, long position. Final thing here, Stellantis. I opened this up recently. Now, this is a long-term, this is a 2027 call. I guess I should cover that really quickly, but I do have to wrap this stream up. It might be easiest just to grab this from my Discord group. Yeah, I think so. So I talked about this briefly yesterday in my stream, but Stellantis, all right, I decided to go long on Stellantis, which is the parent company of Dodge, because I believe that there has been a bit of an overselling, and maybe not if you just look at the conditions of the market and their company right now. Maybe not from that perspective. Let's get the good chart up. But I think when things are considered with what's probable to happen next, that it might have oversold, okay? Because they were at almost 28 in March. They're down over 50% a few months later. And I think a lot of that was due to Dodge having very poor sales and a very poor reception on the new EV muscle cars that they're trying to make. All right, and that's going to definitely hurt their sales. They were making all kinds of money, milking the Scat Packs and the Hellcats, the Charger, Challenger, the Trackhawk, the SRT, Hellcat, Durango, all those vehicles that people were just buying in droves. That hype is now gone. No one really cares so much about the EV, and they also think that it's ugly. So it's not looking good for Dodge's future, and Dodge is probably going to be making up a large part of what this company is caring about for earnings. So the reason why I think it's a good buy is I think it's oversold when you consider the fact that there will likely be a turnaround from the company, since it's very likely that Trump will, one, remove the EV mandate, which is going to help motivate some people to not switch to EV, and which is also going to incentivize Stellantis less to push their EV vehicles, right? Because they'll probably see reduced sales on that end even more so. But then Trump also has kind of expressed in the past a disliking of the mandate for EVs. He might remove that. And if he removes the EV mandate, this is going to give Stellantis, or I'll just say Dodge, the opportunity to make a U-turn and bring back the larger V8 engines. And I think they would do that for the sake of their shares right now. That was a take that I expressed a few days ago, right? And I bought this like a week ago or so. And then this article popped up today that the 2025 Dodge Charger, this is the new one, the V6 version of it, the gas-powered version of it, is reportedly getting fast-tracked due to like the lacking demand for the EV version and the increased demand that they're seeing, or the significantly higher level of demand that they're seeing for the gas-powered version of that vehicle. So it's already starting to prove true that they're seeing that people are wanting the gas-powered version really way more so than the electric one, and so they're switching gears a little bit. No pun intended. Switching gears a little bit. So with that in mind, if they're not forced to continue down this path of EV that they might start to see is not going very well with this vehicle, and they are needing to pull out a wild card in order to recover their significantly falling stock prices, because this means their whole company's valuation over the course of about 6, 7, 8 months has been cut to over or less than half of what it was just that little bit of time ago. That is not good. So they might go ahead and bring back a refresh of the Charger Hellcat with a gas-powered V8 that is most likely going to be supercharged. and or the Challenger as well, and the SUV versions, in order to make a U-turn on their stock, because they won't be forced to do what they're doing now and forced to kind of continue down that path, or incentivized to do it with the EV tax credit. And if that happens, I think we will suddenly see, as soon as that announcement happens, a U-turn on the stock price, and whoever's bought into the fear will be able to capitalize off of it pretty heavily. So that's speculative. That's me just thinking like chess, not checkers, right? Many steps ahead, but those things would have to happen and line up. But I think it's probable, and it's a slept on, not thought about play. And so for that reason, I went ahead, I bought 7 calls for January of 2027, the furthest out call I could get. Now, this is not going to be the cheapest call, but in relation to the stock price, it's only 2 a contract when the current price is 12. That's actually pretty good. A lot of contracts for stocks that are, larger. A lot of times you'll see the contract price, for options that are that far out will usually be like half the cost of a share. And a lot of times it's not worth it if you could just use margin. But this is like, 20%. So there's a lot of potential leverage that you can have there for a really low amount of capital investment. So anyway, that's what I did. Bought these on the 19th. I think this was yesterday morning, and we're down a little bit, but this is a 2-year investment play. I think it'll pay off. It is possible, though, depending on how much time passes, because you can see just from looking at the chart that we are trending down still. And with this negative stream of red, we could be looking for a pretty significant support to hit in order to bounce before things were to stabilize. So we could be very, very likely headed down to $10, which means I'll probably be down a couple more hundred on the call over the next couple weeks. But again, this is the next 2 years, or almost 3 years next 2 years and some change that we're looking at here. So that does not matter. But if we do end up here or here, I might just buy one more contract, since it'll be much cheaper at that point, double down on the idea. And, especially if we can get to like 7, bounce off of that, buy a contract like here, make big money if this actually reversed, right? So those are the plays for now. Keep those things in mind. Hope you guys found this stream to be valuable and useful. Don't forget, if you don't already, follow me on Twitter or X. You can find me on X at Mariano on X. It's the new Twitter handle. And then you can also find me here on YouTube, Meet Mariano. And go ahead, subscribe, like this video if you did. Appreciate it. Retweet this post if you're on X, if you found it to be valuable. And don't forget to follow me on both platforms for updates and also to help my account grow. All the engagement matters. Drop some comments below. Let me know what you think. Let me know if you have any questions, and I will catch you